In this video, I'm going to be discussing with you how to apply market structure to wave analysis. How to apply market structure analysis to wave analysis. Let me say this. At Potential Miners International, the focus of our analysis, technical analysis now, is that we analyze waves in the market and we trade following the waves in the market depending on the time frame. It might be weekly waves and it might be daily waves depending on the wave that we can pinpoint in the market at a particular time. So now in trading the wave, there is a way you apply market structure. It's very important that you come to terms with the application of market structure when it comes to wave analysis, because market structure is very central in any analysis you want to do as a trader. Whether you're a stock trader or you're a forex trader, understanding the market structure is very important. In fact, if you stay with me to the end of this video, I'm going to give you the time frame that, based on our research, is best for analyzing market structure. Of course, market structure will play out in all the time frames, be it monthly time frame, weekly time frame, daily time frame, 4 hours, and even 1 minute time frame. You will see market structure, but there is a particular time frame that, if you can get the market structure on that time frame right, you are going to be trading in alignment with the movement of the market. And most of the time, because you have gotten that right, there is high likelihood that you will enter profitable trades. So very quickly, let me just give you a summary of what market structure means. I'm going to be drawing, some things so that you will just have an idea theoretically what it means. However, we are going to go into the chart so that we can have, real life data example. You will now see how to mark structure out on the chart. So very quickly, in discussing market structure, there is a particular term that we call character. It's very important that you understand what we mean by character. And character means the movement of the price action, you know, in terms of, after a movement that looks like an impulse, what is the movement that follows that impulse is what we call correction. Now, immediately another impulse wave follows that particular corrective wave, is forming a character. Now, market structure is analyzing the character of the price action. Do you get that now? Market structure is analyzing or evaluating the character of the price action of the market at any point in time. What am I talking about? Now, let's take, for instance, you are in a downtrend. Now, your downtrend is going to be forming a particular character. Now, let's say you start from this point and this is an impulse wave. So you have an impulse wave is going to be followed by a corrective wave. Now, this corrective wave will form another impulse wave, of course, given that you are on a downtrend. So you'll be having lower lows and lower highs. You see, these lower lows and lower high are what we call character. So understanding market structure means that you are following the market based on the character of the price action per time. So in a downtrend, you are going to have something that looks like this. Of course, this is just a theoretical picture. In the real market terms, it might not be straight like that. Of course, I'm going to show you example. Now, the character you have for this downtrend is that you are forming lower lows and lower highs. You will notice that this is a low. This is a low. Let me see if I can tag this. This is a low. Okay. This is a low, something like this. This is a low. This is a low. Now, you now have this to be a high. You tag it to be high. Now, the next one is going to now be a lower low. You will notice that this particular low is lower than this. That is why it is called a lower low. Now, let me put that to a lower low, LL. Now, the next one that you will see is going to be a lower high. Now, you notice that this is an high, but this high is lower than this high. So, it is called lower high. Now, this is what we call downward trend character. So, this is the character that you will see on a typical downward trend. Now, this, by the time you now begin to mark this out, that is when you say you are doing market structure analysis. So this is what we call a bullish break of structure to the downside, of course. I mean, a break of structure bearish. Break of, let me take that again, break of structure bearish. Now, immediately that happens and you have a lower low and a lower high, if the movement of the market still break this structure, it is another break of structure bearish. You see this now, break of structure bearish. Now, as long as this character continues to form lower low and lower high, you will say that you are in a downtrend. You will say that you are in a downtrend. You see that this is downtrend now. I'm just, trying to paint a picture so that you can understand it from a theoretical point of view. I'm still going to go to the chart and show you how to really spot this market structure and how to chart it and how to label it correctly, because it is very important. If you are not able to label it correctly, it might mislead you in your analysis. Is that okay? So let's know, if you flip this now, you will have the character for an uptrend. Let me quickly do that so that at least you can see for yourself what I mean. So for an uptrend, you are going to be having the price action will be giving you a character that looks like this. So it's going to be forming higher highs and higher lows. You don't need to necessarily cram this. By the time you stay on the market for a while, it's going to become part of your terms. Is that okay? So the market will be forming higher highs and higher low. So let's say this is an high. So you start with this. This is an high. Now this is a low. This is a low. Now the next high that you will see, you will notice that this particular high is higher than this high. So it is called higher high. Higher high. You see that now, HH. And this one will now be higher low. Immediately you have something like this, the market is giving you a bullish market structure character. Then if you are to mark it out, you will be marking out this particular zone that the market breaks. In other words, you are marking out all the resistance zone that the market was able to break. In this context now, you have a break of structure bullish. You see it now. This is a break of structure bearish, a break of structure bearish. This is a break of structure bullish. Now, if the market continues like that, it means you have an uptrend, an uptrend. So the structure of the market is in an uptrend. This is very important, and you must know how to spot this in the market because it is very central for to whatever you want to be doing at any level of analysis. You don't want to joke with structure. Structure is very, very important. Structure is very, very important in the market. Break of structure bullish. Now, this is an example of an uptrend. Is that okay now? Now, because at potential miners, we trade waves, there's a way we apply this, and it's going to be very interesting. By the time I show you, you will know how to really apply it and the time frame you are to focus on when you are doing your market structure. It's okay. So this is just what seems like a theoretical overview of a downtrend and an uptrend. This is a character. This is another character. Another one that you can have is what is popularly known as a ranging market, where you will be making an equal low and equal high, equal low, equal high, equal low, equal high. This is another character. It is important that I talk about this because if you know how to spot the uptrend and you know how to spot the downtrend, by the time this character begin to form, if you are not careful, you can even mistaken it for uh, another thing. Is that okay? So this is equal low and equal high. This is another character. So when you are talking about market structure, you are looking at the predominant. I want you to take note of this word now. The predominant character of the price action at a particular time that you want to analyze, at a particular time or session or season that you are focusing on. So it's very important that you know that that is what market structure is all about. Now, this is just a theoretical overview of what market structure is all about. I'm not going to go into the chart now. I would like to show you examples of what I've drawn out so that at least it can make a bit of sense to you. So that it can make a bit of sense to you. But then let's see. So let me clear this chart now so that now at Potential Miners International or we trading wave, I've said this, I need to be repeating it so that if you want to apply whatever I'm teaching you, you will have to apply it in the context of wave analysis. Are you getting it now? Now, if you want to mark out this chart now, this is gold. And of course, it's clear that gold has a directional bias that is in an uptrend. So if you want to mark this chart now in terms of the structure, you are looking out for two things. You are looking out for impulse wave and you are looking out for corrective wave. It's very important that you know what you are looking out for. An impulse wave, you must be able to identify it and to know that this is what uh, symbolizes, or this is what exemplifies an impulse wave. An impulse wave will have a continuous candlestick, at least 2 to 4. Take note of this. 2 to 4 consecutive candlestick, and that's the term now, consecutive candlestick in the direction that you are looking out for. For instance, if you are in an uptrend, you want to see 2 to 4 consecutive, two or more, let me put it that way, 2 or more consecutive candlestick that forms an impulse and breaks a structure. Let me take that again. An impulse wave is 2 or more consecutive candlesticks that forms an impulse wave that breaks a structure. A structure in this sense will now be, for an uptrend is going to be a resistance zone, and for a downtrend is going to be a support zone. I'm going to show you example now. Now let's say we want to start our analysis from this place. I want you to look closely. Let me zoom out so that you can see. Now you are looking for an impulse wave and a corrective wave, and I've been able to explain what an impulse wave means. Now before we dive deep into the charting, let me explain what a corrective wave means. Now a corrective wave most of the time will be exemplified by two or more candlestick as well, that moves in what seemingly does not look like impulse. However, what really proves that that is a corrective wave is that it does not break the previous low. You need to get this now. It does not break the previous low for an uptrend, and it does not break the previous high for a downtrend. Now this is just theory. Let me see if you can if we can really okay, I think I've cleared what I've drawn. Okay, so let's just use the chart as an example. Now for an uptrend, now you want to see this is a consecutive bullish candle. Now when this bullish candle start to move, the only thing that will make it that will target an impulse wave is if this consecutive candle was able to break a particular resistance zone characterized by a corrective wave. This is what I'm talking about. Look at this now very closely. You see that, you see this now. This is okay. Let's say we start from this place, somewhere around here. This is an impulse wave. You have two or more consecutive candlestick. Now a corrective wave also, you have two or more consecutive candlestick. Now in a situation where you have one candlestick as corrective wave, it might mean that there is a very strong bullish sentiment in the market for an uptrend, and if it's a downtrend, it might mean that there is a very strong bearish sentiment in the market. However, in most cases you want to see two or more candlestick as a corrective wave that do not break this low. This is a low now. You notice that these do not break this low, so this is now a corrective wave. And of course, when the candle now begin to move, is still expected to move with two or more consecutive bullish candle for it to make another impulse wave. And this two or three or more consecutive candlestick should break the previous resistance zone. You see that now? You see that now? So this is how you chart market structure, and you will do it like that. Now in this case, now you will notice that there was a shift of character here from this place now, because this particular corrective wave was able to close below this particular previous low. Are you seeing that now? This is what we call temporary change of character. This can be confusing, but if you know how to analyze wave analysis, you will understand why it's like this. And of course, in my subsequent video, I'm going to explain each of these waves. I will explain the daily waves, how to spot it, how to take trade based on the daily wave. I will explain the weekly wave in separate videos, so that you will know how to take trade from each of these waves. And I will give you the terms where are you to position the money box and the, of course, the entry box. These are very powerful concepts that you really need to understand if you will trade using wave analysis technique. Now let's see if we can just go back in retrospect to draw a bit of structure that is bullish. Now see this now. Immediately you start to move. Let's say you start to move from here. This was able to break this structure, this particular resistance zone. So it is an impulse wave, and you will see minimum of 2 consecutive bullish candles. Now this is minimum of 2 corrective wave, but it does not close below this particular low, so it's a corrective wave. Now the next one, you will notice this must close above this place for it to be an impulse wave, for you to say this is your structure. The next one is what you have here. It does not close below this place. The next one is what you have around this place. The next one is what you have here. And of course, this is a real life data set. It's not going to be like the theoretical example I showed you, but you can still follow what I'm drawing to say that you have minimum of 2 consecutive bullish candlestick that breaks each of the resistance structure. This is how you draw market structure clearly. You don't need, in fact, you don't need to struggle with it. Are you seeing it now? In fact, without even drawing it, you can see the structure. By the time you familiarize yourself with the market over time, you will now be able to spot the structure without even drawing it. Is that okay now? Let's go and let's pick a case of maybe a downtrend. I know gold has been trending most of the time. Let's see if we can have a downtrend. Okay, let's say Euro USD. Let's picture downtrend. I think I'm seeing one here. Suppose this is where the market is at the moment and you want to draw the structure. It's very clear. You will now start. You start from, let's say you start from this top. This is an impulse wave to the downside. You notice that we have 2 corrective candlestick, bullish candlestick. Are you seeing it now? This is another wave. You see that now? This is another wave. This is another wave. Now, this is what I'm talking about. This is an example of a very strong sentiment in favor of the sellers, because one candlestick was able to break the previous support zone. And this, you will have to count it as an impulse wave, even though it's one candlestick, because that candlestick represents sentiment. You know, anytime you see a very long candlestick, whether to the upside or the downside, is a reflection of market sentiment. You get it now? It might be risk sentiment, maybe in terms of risk on or risk off. Maybe there is a particular tension in global tension, and a lot of capital is now flowing away from a particular currency in favor of another currency. You see that now? This is how you mark the structure clearly. Now, this is very important that you know how to mark it. However, what is most important is how do you apply this market structure in your trading. This is very important. Marking the structure might not really help you if you don't have a particular way you apply it to your trading system or your trading strategy. And I'm going to use our own trading system as an example now. I'm going to mark out the structure and I will show you what we look out for when we say, okay, market structure, how do we apply it to wave analysis now? Is that okay? I believe I've been able to establish the different type. And of course, you can have a ranging character where you will be having equal highs and equal low. I'm trying to look out for an example of such character where you have a ranging character, equal low. I think I've seen one. So something like this looks more or less like equal low. Now notice that it's not really breaking the resistance zone until when it got to this place. Are you getting it now? So this is like this is like a ranging character, and it's still a structure that you might need to consider, because from that structure, obviously, if you have watched my video of market orientation, when you have a structure like this after a bullish trend, is what we call distribution. And of course, another action will follow that particular distribution that you might need to still take cognizance of. But having said that, let's now see, suppose you want to trade at potential miners, how do you apply market structure? This is the most important aspect of this video. I want you to listen very, very, very closely. It's very important that you understand what we are talking about. I'm going to use, let me see if I can use this as an example. Suppose you want to pick trade with our trading system. The first thing you want to look out for is to say, what is the directional bias? And I've said that in the previous video, that is very important. The directional bias is the first thing you want to look out for when you want to trade. The next thing you now ask yourself, you want to do top-down wave analysis. So, and that will require that you go back and look at the market orientation. So on the monthly is where you view the market orientation. Are you getting it now? So on the weekly is where you view the directional bias using this particular tool. Is a free tool and I've done a video about it. You can check this channel to get the video for this particular tool. This tool will help you to spot the directional bias in 5 seconds. You can look for the video on this channel. So after you have been able to establish the directional bias, you check the market orientation. Market orientation will just give you overview of what the market could do looking forward. You see now. Now the next thing you and this is very important now. The next thing you are to do is to now go to daily time frame. It's very crucial that you now take your analysis down to daily. It's on the daily time frame. I promise you that at the end of this video, I'm going to reveal to you the best time frame where market structure can give you the most advantage, and that is the daily time frame. If you're on daily time frame and the structure is saying sell, please do not buy for whatever reason. And if you are on the daily time frame and the structure of the market is saying you should buy, do not sell for whatever reason. Let me repeat this. The most important time frame based on our 6 years of research, where conducting market structure analysis is going to really it will contribute significantly to your analysis, is the daily time frame. So it means that if you want to chart you want to just draw out the structure on your chart, the focus time frame should be daily time frame. Of course, it's not as if you can't draw structure on other time frame, but I'm telling you, based on our research and based on the way we use it at Potential Miners International to trade wave, we analyze our market structure on the daily time frame. Is that okay now? So any other time frame, if you analyze it, of course, you can still add to your analysis, but daily time frame is the focus. Anytime the daily time frame is saying buy, that is when you buy. And when the daily time frame is saying sell, if that sell is not in the direction of the directional bias that you have established on the weekly chart, it means you will hold on. Let me repeat what I've just said. Our analysis starts with directional bias. So, for instance, you want to trade Euro USD now. You want to check the directional bias, and you have to do that on the weekly time frame. After the directional bias, you are doing this with a free tool. You are not analyzing anything. How do you know? Immediately you open your chart and you activate this free tool. Immediately you check that the price is above the cloud. It means that the directional bias is in favor of buy. If the price is below the cloud, it means you have a sell directional bias. The implication of that is you will not be selling when the directional bias is saying that you should buy. And you will not be buying when the directional bias is saying you should sell. Now, We want to trade Euro USD because I don't want this video to be a long one, but I want you to follow closely like you want to pick a trade using potential miners trading system. You have checked the directional bias on weekly. It's obvious. If you can see this, it's obvious that the price is above the cloud. So let's say we are here now. Remember, I told you that we trade in wave. If we are to chart this, you will notice that we have, this is an impulse wave, this is a corrective wave, this is an impulse wave, and this is another corrective wave. This is another impulse wave. I told you that we trade in waves, so we only take trade around these zones. We only trade these zones, these waves. If we trade, we only trade these waves, these waves. We only trade these waves. Are you getting it now? Once you have the directional bias sorted out, then you can now go to your daily time frame. Remember, you are to do the market structure analysis on daily time frame. But you have established that you want to trade the weekly wave now. You go to the daily time frame. Look at this now. This is the structure that I can see here. And I saw what looks like a break of structure because this particular movement broke this particular low. So there is a break of structure now. But because the directional bias as of this time is a buy on the weekly, you are not going to be selling. You will only wait for the character of the market to shift. You see now, to shift in favor of the directional bias. On the weekly, we have a bi-directional bias. When you get to the daily, you are waiting for the market structure to have a buy market structure or a buy character or an upward trend character, which means at least there must be a character shift. You see now, this is the first movement to this place. Now this is showing you something that looks like a downward trend. Now you are expecting that you will not take a trade until you have what we call a character shift. This is what we call character shift. Character shift. It's very important, and this is a bullish break of structure bullish to the upside. Now this character shift now makes the market structure and the directional bias to be the same thing. So the summary of how we apply market structure is that we only trade the structure that aligns with the directional bias that we have established on the weekly time frame. Now this video is not going to show you exactly how we pick each trade because there are concepts that I must still explain before you can be able to relate with how we pick our trade. But I'm only telling you or showing you how we apply market structure to our wave analysis at Potential Miners International. And I said that once you identify or establish your directional bias, you will go to the daily time frame. Directional bias is on weekly. You go to the daily time frame and now look out for market structure in favor of the directional bias that you have established on the weekly time frame. I just want you to maybe you might need to rewind this video or pause or listen to it over and over so that you can understand what I'm trying to explain. You don't just do market structure randomly. There must be a way you apply market structure to your trading system. And at Potential Miners International, we ensure that market structure is in alignment with the directional bias before we can now begin to take trade based on the established market structure. I want to believe that this video, if you can listen to it and really get what I'm trying to explain, and you apply it to your trading system, even if you don't want to trade wave analysis that we trade at Potential Miners International, I believe that is going to really change the game for you. Market structure is very important. When the structure is saying you should buy, don't sell. And I said it that the best time frame to analyze market structure is on daily time frame. I want to believe that you are getting value from this channel. If that is the case, I will want to advise you that you stay glued to this channel, so that you can get updates. You might need to subscribe and turn on the notification bell so that you can get updates of subsequent videos that I will be posting. And until I see you again in the next video, thank you for listening. God bless you.